Hello and welcome to another episode of Casual Friday. I'm here with the Duck. The show, as always, is brought to you by Woo. Links available in the description below. Be sure to check them out. But as always, do not keep any more funds than you need for trading on any single centralized platform. If I sound raspier than usual, it's because I'm not feeling particularly well. That's not because the market is green. I'm not a perma bear. It's an unrelated health thing. So Don will be doing most of the talking, which I'm sure most of you are here for anyway. With that said, I've got your Twitter open as one of the sort of news tabs, Don, and you've been tweeting like a lot. So I'm wondering if that's a reflection of the magnitude of your bullish conviction. Is it boredom? Is it Elon check farming? I mean, what's contributing to this above average frequency of tweeting?
Yeah, I need the Elon checks. It's been rough out here.
Understandable.
Nah, I'm just having fun. I've been more bullish before. But I like the lower time frame price action, and I like the daily. The rest I just don't check, and then that works.
Yeah, not a bad way to look at it. I saw you were castigating the low time frame traders earlier, given the NFP move earlier today. We had this 5-minute, low time frame correlated move higher and lower that's been fully retraced at the time of recording. I think those were the people that you were making fun of for getting liquidated. That said, let's sort of set the framework for the bull tweeting, because I feel like Casual Friday should be rebranded to something like demystifying DonAlt or deciphering DonAlt or decrypting DonAlt or something of that nature. Maybe we should do a poll, because basically you just tweet incessantly on Twitter with very loose reasoning, and people think you're just it's like a sentiment thing or whatever else. And then my job is to get you on this show and beg for clarity. And maybe even give you a way out. Like, hey, Don, did you really mean this? And you're like, yeah, sure, whatever, just shut up. And we sort of publish that. But let's attempt, because you did leave some breadcrumbs as far as what's informing your view at the moment. And some of them are related to ETH and alts, right?
Yes.
So I guess the core view is essentially BTC looks, for the first time, decent on the daily plus lower timeframes. Meanwhile, ETH BTC has been getting hammered. And alts haven't been performing like super well during the course of this bounce. Is that generally fair? Is there more to it? I mean, we're going to get into the high time frame chart stuff in a moment, but in terms of what's driving your thesis, is there anything else to be aware of? Is there some macro meme that you've been relying on the week after telling us it's all over?
No. I mean, basically, like I've been looking at the charts and I've seen chop basically for the last ages. And I've been looking at the charts lately and I've seen constructive price action. And then I check the sentiment and people are just like, yeah, it's just spares, like reloading, whatever. I don't even know what the fuck that is supposed to mean. And sentiment is quite bearish still, even though I think we just had a daily breakout, right? Like we had a daily breakout on the 1st of October. We had that massive candle to the upside that barely anyone could explain why that was happening. And I think ever since then, basically, we've been consolidating around this 28K level. And for me, 28K, just based on weekly resistance, the only real resistance I care about, right? And the fact that we've been stuck to it for so long actually has me a little bit excited. And then on top of that, we finally did all of this. And like the sentiment, like I see stuff on Twitter where people are like, oh yeah, but this is just the pump before the dump or whatever. And it's one thing, right? But the best sentiment indicator in the market, I think, is the altcoin landscape as a whole. If they're doing quite poorly, people just expect downside and people start shorting, right? Like there's something that you see, like people are like bearish on altcoins and then they short Bitcoin for whatever reason, or just generally they short because they think the market is going to zero because the altcoin is down 90%. And I don't think that's true. Doesn't really make much sense. And but that's something that I've been seeing, especially when you look at ETH. ETH's been massively underperforming, and we've been talking about ETH for months now, trying to be the voice of reason, right? Being like, okay, we would love to be bullish ETH, but it's making lower highs and lower lows continuously for pretty much the last year. And it's approaching range low, and that's not the best if you want to go up, right? And that's finally playing out. So basically, a bunch of people in the ETH land are getting wrecked, and I think that's basically just showing like the risk appetite. Like people are in altcoins are finally starting to reconsider. Maybe that's not the best move for like the ETF reasons that I've outlined in other shows. Basically, like why would you be buying altcoins, especially ETH? Because I think ETH is too sophisticated for that kind of play, right? Like when you think, oh, I'm buying altcoins because Bitcoin is going to go up, or like because Bitcoin is getting a Bitcoin ETF, I think you have to be quite stupid to make that argument. And the people that are like would be interested in buying ETH are not that stupid. Now, the people that are buying other altcoins, they can and very likely are stupid enough to kind of follow that reasoning. So you have some chance for that to work. With ETH, in particular, I just don't think so. Like I'd be surprised. And so far that's been true, right? That's been going quite well. ETH's been just mercilessly trending down against Bitcoin. And I like that development because I think a bunch of people will basically move out of altcoins into Bitcoin as Bitcoin keeps going up. And that kind of sets up a really nice alt season or whatever you want to call it later down the line. If we have like a Bitcoin ETF pump, and that's obviously not guaranteed, but if we get it, that's going to be quite nice because I think it's going to push down a lot of the ratios. Not all of them. There's always going to be outliers, but I think the ratios against Bitcoin are going to be pushed down if Bitcoin rallies, which will kind of fuel the rally even more. And then the moment the people that have been like sticking with the altcoins because for fundamental reasons or whatever, the moment they start capitulating, I could see a major reversal, and then you get like the good old like altcoin pumps where they double, triple, quadruple, whatever. That's kind of what I would love to see, and so far that's kind of how it's playing out. But obviously can reverse at any point. That's why when I'm looking at the altcoins, I always talk about the lows and the highs. Basically, if you can break market structure, I'll be very quick to jump board from my bearish ETH ship into the bullish ETH camp because I want to be bullish ETH, right? Like, don't get me wrong, I want to be bullish ETH, but I look at the chart and it looks horrendous, and I look at kind of the sentiment everywhere else, and that's still way too good, right? In my eyes, anyway. Like people are like, oh yeah, but ETH is gonna go up whenever Bitcoin's done, or ETH's just gonna catch up and it's lagging a little bit, and that's not something I would be comfortable longing. I think people are kind of like they're making up delusions about like that when Bitcoin gets an ETF, that's gonna be right before ETH gets an ETF, and I think that's very unlikely. I don't know what you think about it actually, but I think it's just that's not how it's gonna go. Like if you get a Bitcoin ETF, I don't think you get an ETH ETF just a month or two after. If anything, that's gonna be quite a bit in later, basically. So yeah, I don't know. Like for me, that's just altcoins doing poorly means people are not like speculating too crazily. They're not doing dumb shit, which is technically just generally good, especially in a market that does have thin liquidity. And then Bitcoin obviously has the ETF narrative and just needs a little bit of a push in the right direction. And then you can have altcoin flows into Bitcoin. You can get basically more interest in Bitcoin as a whole just because of the ETF. Because right now no one really cares about it, but the moment price moves, people would care about it. So that's kind of like the combination of things, coupled with the fact that we're having low time frame, good price action on Bitcoin. It's not really not that complicated, but I'm just taking a gamble on all of those things combined.
Yeah, because you kind of front ran one of my one of the questions that I had about there was a tweet related to these dynamics where you said super exciting. If we get a solo BTC pump, I'm full blown bull. Combo pump, I'll sell into it. If ETH starts going up on its own, I'll be bearish. If everything goes down, I'll delete this tweet. Except the last one, obviously. So is the lack of altcoin strength and the sort of BTC centric pump is that a good thing? Because that's obviously the scenario under which you said you would hold, or you'd be a full-blown bull. So is that
Yes.
because of would that indicate a lack of froth in the market? Is
Yes.
that sort of the
Pretty much
signal?
exactly.
Okay, fine.
Yeah.
I mean, that makes sense, right? Sort of lack of froth in the market if shit doesn't pump, plus it lends some extra credibility or juice to the Bitcoin ETF narrative. And then if Bitcoin goes high enough, then risk appetite will go up and you can rotate later as opposed to earlier,
Yes.
having given Bitcoin more space. Is that roughly correct?
Yeah, exactly. I think in general, like if I want to buy altcoins, I want to buy it from people that literally just lost all faith. It's the only way that I want to buy altcoins in those circumstances. I will obviously. There's going to be, like I said. I mean, for example, AVAX is up like 6% today, and people are already like, "Hey, Don, did you buy AVAX? You should have bought AVAX, whatever." I don't really care too much about that. Picking the right one is just like not for me. I want to buy in general, even if it's just ETH, right? I'm more than happy to just buy ETH, just take the whatever, like depending on how far it dumps, but like let's say a 2x against Bitcoin once Bitcoin is slowing down. I'm more than happy with taking that rather than just positioning early and hoping, right? Because if there's one thing, if you remember back in 2017 when we had this massive run up from basically nothing to 20,000, altcoins were actually getting hammered. A bunch of them actually even lost value on the dollar chart while Bitcoin was just completely running. And I had a tiny portion of my portfolio back then in altcoins, and I was hurting, even though it was tiny. And I've learned from that point onwards, basically, that if you don't have any Bitcoin and it goes on a run, like that just sucks. And that's kind of the environment that I think if we get good price action, if we get a pump, that's what I would expect. Basically, Bitcoin should just run solo, or mostly solo. A few outlier altcoins going absolutely ballistic, but I don't care about them because I'm too dumb to pick them right. And then once Bitcoin hit 20K and started going back down again, that's where the altcoins started catching up. So I'm gonna look at it relatively similar as long as we actually get good price action on Bitcoin, right? If Bitcoin just craters, it's a different story. And it's like I said, it sounds like I'm super bullish, but I'm like, I see opportunity here. But if that opportunity doesn't play out, I'll actually be very, very bearish. So it's like we have a little bit of window. We're bouncing from support. We finally broke out. That has to be it. So either now or never. And whenever I have those kind of setups, I actually like to trade them, right? Because if I miss it, it kind of sucks. And if I'm wrong very quickly. So it's not that much pain on the time front. And it's a pretty clear invalidation, which makes it a little bit more comfy for me.
If I'm right, I'll be very right. If I'm wrong, I'll delete the tweet. I mean,
exactly.
That's a pretty good setup. Cool.
Yep.
And the final point about the alt dynamics you mentioned, I assume just generally longevity-wise, it'd be better if at least the breakout portion is BTC-centric, so the froth can come at higher, healthier BTC prices and market structure. Okay, cool. I hope you enjoyed this segment of demystifying DonAlt. Leave a like on the video. Tune in next week for when he's full bear and talking about the German economy and how normal people are suffering again.
Oh.
That'll be
very likely if this breakout fails.
Yeah, understandable. Let's look at some charts, which is a cornerstone of the show. I did enjoy some feedback that you specifically got as having fourth grade comprehension and just being dumb or whatever. That was.
I mean, it's true to be fair, but yeah, people are very angry for some reason.
Well, I think it raises a more interesting question. So, okay, if you have all this like excellent protocol, technical, fundamental developer knowledge, to what extent has that helped you be a crypto investor, right? And if you just refresh CoinMarketCap every year or every cycle, it's quite clear that longevity isn't particularly valued by this industry. And it's primarily just sort of liquidity, attention, hype, momentum. So then that raises the following question: which skill set is better equipped to deal with those drivers of price? Is it price-related stuff like technicals and charts, or is it fundamental related stuff like being knowledgeable in all the dev space or whatever? And I mean, my inclination, obviously, for obvious reasons, would be the former. Or at the very least, shouldn't be so ready to dismiss people who focus on technical momentum, that type of stuff, because it's quite clear that still, even after how many cycles, it's a massive driver of whatever market conditions we get, and it ultimately decides a lot of things fairly or unfairly. Now, sure, some stuff gets oversold, some stuff gets overbought, and sometimes there's a much bigger gap between the quote-unquote real value of the thing and how the market is perceiving it, like on correlated sell-offs and stuff like that. But in general, I would argue you haven't been terribly well served by being a fundamental-only blockchain expert, so to speak, especially because high time frame technical stuff is so easily accessible, right? Like, you don't need a course in computer science to figure out the basics. At the very least, the most charitable version of the argument is that you're leaving a lot on the table by just outright dismissing people who look at charts and trade medium time frames.
Yeah, I agree. But then again, like, it's not about making money, it's about being right, So.
Yeah, you're right. Yeah, I mean, when you're a trader speaking to non-traders for whom the speculation part isn't a priority, you can try to have a back and forth and debate and discussion, but your frames are just so different. Like, the entire framework of the discussion, that there's very little in common there. But history is not kind to people who sort of overemphasize the fundamentals and ignore price and technical stuff in general in crypto. I'd be willing to argue. But again, you could dismiss this whole segment by saying, lol, of course, two dumb TA traders who don't know computer science are sticking to what they know. Like, fine. But I think there is some credibility to that argument outside of our own personal preferences. Nonetheless, we're preaching to the choir here, given the audience of Technical Roundup. Let's give them what they're here for to some extent with the charts. So we could do the monthly spiel again, Don, although at this point, I wouldn't be surprised if someone just said, every week you do the same thing and say that 30-ish is chop on the monthly. Can we just come back to the monthly when it's at 20 or at 35, 38? And I think they'd be pretty well grounded in that argument. So I think unless you have strong views on, I mean, the closes are still interesting, but unless you have strong views on the monthly right now, we could kind of just skip it and go to the weekly and the daily.
Skip it.
Okay, fine. And most of the levels overlap anyway. It's not like we're missing a ton of context.
Yep.
So as far as the weekly goes, Don, if someone fell into a coma a couple of weeks ago, and they remembered Don saying weekly resistance at 28, and they wake up and see the market trading at that level, and they think, oh, Don must be really bearish. It's like at the top of resistance, and it's one of those setups where it closes just below and then pokes above. Surely I'm going to go on his feed and see that he's a perma bear. And instead, they see what they see, despite the market closing below that weekly range high at 28K. So I'm guessing you think it's going to break. The best sort of, I think you have to make a bet here, right? So if I had to steelman the bullish case, it would essentially be that the daily cluster has been reclaimed and daily market structure has been broken. And so if you take those two levels together, which is daily cluster and weekly range high, there's like 3-4% between them. And at the moment, we've had no closes below the upper boundary of the daily cluster, which is like a good sign. And that also means that your invalidation is pretty clear, that if the daily starts to roll over below 27.4, I mean, yeah, there's still some space to make a higher low and the cluster bottom at like 26.9, but it'll start to look pretty bad, especially given how the intraday price action has sort of unfolded. And then if you also bear in mind that you are sort of medically, genetically allergic to buying breakouts, then buying above 28 kind of isn't an option, right? Or breakout buying that level. So if you want long exposure and you feel that sentiment is in a good place and there's a lot of positioning that might be erroneous and you can't buy the breakout, your next best bet is to buy the support closest to the breakout so that if the market does break out, you're A, on board, and B, have a reasonably close by invalidation to that breakout point, and that is the daily cluster at 27.4. Is that fair? Is that right? Have I completely made that up? Because that's my DonAlt headcanon at the moment as far as the TA goes.
That's pretty much exactly right, yeah. I mean,
I need to get paid more for this, honestly.
Yeah, you should. I mean, in general, like understanding the gibberish that I spout, yes, most definitely. You might be the only person on the planet that can. But yeah, I just look at it from like a risk to reward aspect. I think the risk is not that large. The reward is quite large. The chance of this playing out is somewhat okay, not great, but somewhat okay. And then if you kind of count all of those things together, right, it's an okay trade. I would like to be bearish given everything else, like the macro situation. I'm not a big fan of. In general, how everything else is shaping up, I'm not the biggest fan, but I just don't see how I could not take this trade. I'd be calling myself an idiot if I wasn't, and this went up. So I'm just like,
Thanks for calling me an idiot, but
no, for me, it's just like in my head is the last chance to punt along where you print quite big, or just like where this just is a lower high and then just creates us towards whatever 20-23k, and I can buy 20 and 23k, which is quite a nice discount in my opinion. So I'm like, I'm gonna buy 20k, and I bought this just to make sure that if 20k never comes, I still have a position, which I mean is not the strongest argument. It's not gonna make everyone like super happy about it, but I just think it's a decent enough kind of like risk to reward setup with decent enough probability to play out. I wouldn't say it's more like, I would say this trade playing out is less than 50% likely. But if it plays out, I'm guessing we're gonna go quite a bit above 30k. And at that point, it just makes sense.
it's like lower probability, higher payout type of thing.
Yes. Yes.
As far as sort of targets for this thing, because obviously part of the reasoning, if you're not super keen on the probability, the payoff needs to be high enough to make it attractive. On the weekly time frame, I've got that 28k cluster high thing, which for you to really, make this trade worth it, has to break. Where is the first trouble area for you, or the resistance, or the point at which you'd start to pay attention to the breakout past the immediate leg if it should come? Is it the range high at 30k, or do you really think we'd be in for a weekly range break at that point and a larger expansion? Would you ignore 30k completely, or would it be one of those levels that where you say you'll ignore it and then it goes into it and you don't like it and you dump it and then you end up not ignoring it even though you said you'd ignore it, which would also be a DonAlt classic?
Yes. So like, I think I'd ignore it, but if price action is bad at 30k, I'd probably sell into it.
It's Schrodinger's fucking level. Wave
Yeah,
particle duality based on support resistance. If it is observed, it behaves differently and all that shit.
Yeah, I mean, for me, if price action is horrendous there, I'll sell. But because then this would also kind of like make a big head and shoulders kind of situation possible. I think that's more of a meme, and it's not gonna play out. But if price action is terrible there, I'd sell. But otherwise, I think the first time I'd actually even consider selling if I get what I want, which is altcoin weakness, Bitcoin strength, relatively soon. If I get all of that, the first time I would really consider like selling would be 32k, but I think 36k is like.
I added 32k mid sentence before you said it. This is like a symphony, this stream, I swear. Yeah, no, it makes sense. That's the big weekly range though, as well,
Yes.
right? And we sort of front ran it rather in the last high that we made. So
yeah, I think if we got there, we might wick to 36. Like that'd be the bearish scenario. If we get to 32, kind of close in that area, wick to 36, and end up back at 32, at that point I'd be mega bearish. But we'll see, basically.
makes sense. So expecting the weekly range high to break at 28. First trouble area potentially, maybe not. It depends. Maybe macro will change. You'll see some German people queuing up for bread or something, make you really concerned about the state of Bitcoin. 30k, and then sort of the bigger levels, the breakout levels, 32, wick to 36 if it gets pretty wild. So that's clear on the target front. Let's talk the invalidation front. So for a while, the daily cluster played a big part in the newsletter and just covering it on these streams, etc. At the moment, it's been pretty good. It's been pretty helpful in terms of candle closes. So we haven't closed below the upper boundary, or below the upper boundary rather, but the entire cluster is all the way down to 26.9 on the other side. So what would invalidation look like? Would it be the upper boundary, anything below 27.4? You're like, fuck it, this breakout trade ain't breaking out? Or would you be willing to give it space and spike some of the lows that we've built up over the last 4 or 5 days at 27.4, maybe down to 26.9?
So like my kind of mental stop loss, whatever, was actually 26.2 for quite a while. Like if we approach that level, like as in if we break that low, like that higher low that we set, that would not be great. Now that we've had a reaction today, which I quite liked, to like basically where did it wick to 27.2 ish, the bottom of the cluster. I don't want to see a close below that. So like 26.9, any close below that, I'd probably be getting out. And I honestly wouldn't like if we retraced all of the last 3 or 4 hours of price action, but because that's quite telling. Whenever you get these sell-offs and then you reclaim them entirely, that's kind of like an important point. If you start trading lower than that again, it gets scary. So that's something that I wouldn't want to lose. But in general, like the daily cluster low, if that goes on a closing basis, I'd most definitely be out. And then anything lower time frame, like I said, I'm looking at the 4 hour, 1 hour, whatever, and I don't want to see the recent price action be lost. I have like a little bit of a diagonal on the 4 hour, starting from the Friday 29th, like that consolidation upwards.
Oh, sure.
And like it's a pretty shitty one, but it's good enough.
That's a DonAlt trend line if ever I've seen one.
Oh yeah. If you go on the 1 hour and you just draw like a trend line through the majority of the price action before we had that big pop, that's kind of what I want to hold. Like as in, like the longer this takes, the higher price needs to be for me to be satisfied. If it takes too long, if we keep going sideways here, I might actually close too, because technically it's a breakout. If you stick around for too long on a breakout, that already has a retest, which for those that kind of watch for a while know, like I don't like. I prefer breakouts without any retest, because those are the ones where people are urgently buying. Then I might not like it that much anymore. As in, if this goes sideways for another week, there'd probably be a good chance that I would actually be selling.
So it's time sensitive to some extent.
Yes.
There's also a trend line. I mean, it depends how you meme this trend line. But if you get it from that 29th onto the 3rd of October, onto the 5th, just on the hourly, we technically had a failed breakdown below it.
Yep.
And so, if you put any faith in this thing, and it's not the worst one I've seen, then,
No.
I mean, it lines up with the horizontal levels, so it's not complete fiction. But yeah, that's a decent spot. Although this trend line has had more touches than a cheerleader on Epstein's Island, so maybe at this point, like, the subsequent touches may be less appropriate. But
yeah, you could argue that someone's just like T-wopping in very slowly, trying to get into position.
It's you, bro.
Yeah, I wish.
Fair enough. Yeah, I think that's pretty clear as far as BTC goes. The final question, I guess, is what do you think is sort of levels-wise holding this thing back on the resistance front? My best FUD that I had on Monday markets was the monthly and weekly mid-range. So if you take basically 30K on the weekly as the highest close range high and 26K as the range low, you get 28.1 as the midpoint of that. I think if you take the monthly cluster midpoint as well, you get pretty much the exact same level, 28.1, 28.2-ish. And then on the daily, without drawing a level, that's kind of a good meme on its own as far as support resistance. And that's also, I mean, same level again, because it's not just like confluence on confluence, just the same area coming up in multiple forms. That is exactly the weekly cluster range high as well. So presumably for you, that's the obvious pivot, and you'd feel a bit more comfortable if we got above that, right?
Yeah, so 28K is a huge area, and I think for all of the reasons that you outlined, but also because basically if you look back towards the range that we had before the breakdown on the daily time frame, so like the range from the 25th of July to the 16th of August, if we make it back even to bearishly retest that range, I'll expect us to break into it. These kind of ranges very rarely get retested, right, with breakdowns, unless they're just fake. I hate, and this is something that we kept on talking about in 2018 even, back then, where it was like we really shouldn't retest 6K. If you remember, this was your argument, and I really liked it. We really shouldn't retest 6K because if we go to 6K, we're gonna go higher than that. Seems like like a lot of people that read like technical analysis books or whatever, they're like, this is the best level on the chart. This is where price needs to go before it goes down, but that doesn't really work in crypto as well. It's basically the
Not on
moment you get
Bitcoin for sure. Yeah.
it's basically the moment you get back to that level, a bunch of people lower, because the thing is, like, the higher price goes, the higher conviction goes in crypto as well, right? As in, like, if price goes up and someone sold lower, they're gonna rebuy, and they feel threatened. Obviously, also a bunch of people short those resistances, but more so people are just trying to get back in the positions that they fumbled, and more often than not, this just results in a massive breakout. So if we go back towards that, I would expect a massive breakout, and I think a lot of bears do too. So they're kind of defending this 28K level because it's excellent and it's far enough away from that so that they don't have to be too worried about being run over, which makes sense. Like, if I was bearish inclined and if I was like trying to make a bear trade, I think shorting 28K is actually quite sane. That's the most realistic play that I could make up on the bearish side. I just think you could also short 20, like the breakdown below 27, without having the risk of basically shorting the start of a next leg up. But that is kind of depends on your viewpoint. If you're very, very bearish, I think it makes sense to short 28K.
So if you're a breakout trader type, above 28.1, 28.2 is a decent trigger. Below 27.2 is a decent trigger as well.
Exactly.
Helpfully, neither of us are good breakout traders, so maybe on the execution side, take that with a pinch of salt. As for the bearish retest type of argument, I agree. I think we also spoke about it to a large extent at 19K, or like when we were sort of pushing back into that range low in December of last year and the start of this year, where the argument was, if we don't get capped off, I think we were hyper focused at the time on the range high at 17.6. I'm sure there's an old technical roundup there somewhere, where it's basically that's the range high. We've had a fake out above it. If we close above there, that's a sort of that negates the failed breakout, but also it would mean that we're pushing into the mega big scary bearish retest level at 19K. But those just don't work in crypto, and that's. It's nice to have a more recent example than 6K, because if we kept bringing that up, we'd sound like fossils, I'm sure. I mean, we do already, so it wouldn't help the case. But it's nice to have the one at 19K as well as decent evidence of large range breakdown retests aren't often bearish retests in Bitcoin. I think that's how I'd articulate that. But in the interim, yeah, it makes sense. We have 27.2, 28.2, pick your fighter. That seems to be the Bitcoin side of things, at least, unless you've got anything else to mention.
No, that's pretty much it. I think in general, like, it makes more sense to, at least for me, it makes more sense to be bullish, but I think both sides have a good point, which is quite nice, right? Like, when, like, for example, I have somewhat like decent conviction and I have a really good setup, and I think like a bunch of bears on the other side will have the same. So the cool part about this is that, like, whoever's wrong is going to be explosively wrong. And as in, like, a bunch of bears will short this and a bunch of bulls will long this, which will lead to a big move. So I think we're going to get some volatility in the big move relatively soon. And no matter what happens, which we should all as traders be happy about, even if it goes the wrong way. Now, obviously, I'd be much more happy if it went my way. But if we get like a move to the downside, I mean, I don't really short anymore, but then I think there's going to be much better trades available as well. So hoping for up, positioned for up. But in general, at least we're going to get volatility that I'm reasonably certain about.
I mean, that on its own would be a welcome change, I think, from
Yes.
somewhat recent times. Could you, final note on BTC actually, could you talk a bit about sort of positioning and in terms of execution and building an entry? Because I know you were somewhat breakout buying this initially, albeit reluctantly, and then, had enough dips to maybe rebalance that entry a little bit. Where was the bulk? Where and how was the bulk of your business done?
So like I bought, basically we had the daily close above, and I was like, okay, if this continues going, I would like to have a position. So I basically just bought like around the daily close, and that was the breakout. So around 27.9, which we are exactly at right now. And then that obviously didn't materialize, and I got some like dips into support, so I just loaded up a little bit more. But it's not like my average is the best. Like I haven't calculated my exact average because this is spot trading, but it's around 27.7 or 6 or something, so not great. But I'm still like, even though I'm barely above water on my position, I'm for some reason like I'm quite excited about it, which is usually a good sign. Can be a terrible sign, but it's usually a good sign for me. When I've had at 16K, I still remember, like I bought, and it was trading like below my average, and I was euphoric as fuck anyway. I was like, this is just so great, like I'm gonna make money on this. And I feel a little bit similar now, but not quite the same level. And my conviction back then was basically like 90%, and now it's very different. Like now it's a little bit below 50. So take it with a grain of salt. Don't bet your house on it. But I like price action.
Or your castle. Yeah, fair enough.
Yes.
You also mentioned that, part of the reason these bearish retests, the macro ones, like 6K breakdown and 19K breakdown retest, etc., don't work is because sort of the bulls, the sort of conviction level goes up as the price goes higher. But what we've learned from the legal trials is that convictions also go up as price goes lower, Dom. So it seems to work both ways.
Wow, you went there.
Had to. Let's talk about ETH a little bit, because I think one of your most recent tweets was fudding this thing into oblivion, suggesting 2K ETH and 40K BTC or something of that nature. I know that's somewhat tongue-in-cheek, obviously, but I think it is a reflection of your views on the relative pair in the best case scenario, at the very least. So on the ETH USD front, I mean, the weekly time frame is a bit of a meme. I'm not really sure whether it's worth paying a ton of attention to. You'd be forgiven for saying there were like no good levels until 1400, 1K, or maybe above 1940, whatever. What was that level we spoke about for 8 weeks in a row? 1935, yeah. I think that's a reasonable view. 1400, 1935, and then 1K being pretty good. Even the range low area of 1700 kind of got chopped up a little bit. As on account of the short window of ETH BTC outperformance, but I just don't like the ETH weekly chart all that much, to be honest. The daily is a complete mess as well. That's one of the uglier things I've seen, just in terms of levels and construction. It's like you get one pump, then it bleeds and does nothing. One dump back into the range, like spikes the high. It's a mess, really. So I haven't been paying too much attention to that. Intraday, you can just look at it on the 4-hour, and this thing is really hideous. I think most of the signal is in the BTC pair for a change, and that hasn't been doing too well. We sort of started off the show by pointing out the long-term downtrend in this thing, and the whole window of ETH futures outperformance meme. I think that was a Casual Friday episode and a newsletter, certainly, that aged fairly well, because our optimism for that was tempered, to say the least, and the market seems to have agreed. We'll also cover in the news later how it was pretty terrible trading volumes on the ETH futures ETF, which I can completely understand, because futures ETFs are terrible and expensive and inefficient. But this is also just, I think if you wanted to, like, a really clear piece of evidence that Bitcoin spot ETF is an order of magnitude sort of narratively more impactful than ETH futures ETF, this is about as good evidence as you can get, as far as price action and just flows in general. You did reply to someone as far as ETH BTC goes, when you had I think you had the range low on the weekly, right, at 5.7, and then someone asked, why is your target lower than your support? And your argument was, because I think it'll break. So what did you mean? So presumably in the past we've talked about the acceleration in ETH BTC, and how this trend seems to be sort of pivoting towards acceleration or posturing in that way. I'm assuming that's the underlying reasoning, that while there is a support at 0.57 in pure TA terms, because the trend seems to be accelerating, it's reasonable to expect that to overthrow, if not break, on first touch. Is that why, or have I erred?
No, it's exactly why. Like,
Oh,
I was
jeez.
very excited
I
about
could
buying.
automate you at this point. Maybe I'd
Oh
actually
yeah,
make some money, but I'm working on it.
no, I mean, 0.0 like 57, right? That level I was very excited about buying when we were trading at resistance at like 0.07. Um, but it took us too long to get here, basically. Like, I don't, and this is something we've also talked about quite a lot on this show. Like, the bleed stuff is just not my favorite buy. And if you look at the weekly, there's anything like if I don't think there's a better example for bleeding than this, right? Like it's not really going, like it's taking a year for this to go down like 20%, which is nothing in crypto, right? Or like 30%. It's nothing in crypto, and it's been basically like 1% each 10 days or something. Instead of like what you usually get in crypto, which is like a 10-20% nuke, and then you go sideways, and then you go. No, it's been pretty damn consistent. Like it's just bleeding downwards, and it's bled too close to the support, and I'm not gonna buy a support that is being bled into. I'd much rather buy a support that we get a nuke into, and
Where is
that's
that?
why. Come again?
Where is that sort of larger breakdown sport? Because we start getting into like really historic levels, both historic and historical, I suppose. Closer to '04, I think. If you go on the weekly and the daily, it's sort of large consolidations or pre-breakout levels. That's the next kind of area. Because when we broke out from there, we went up for like 3 massive weeks in a row, 4 rather, and that's when I made our range high initially at '08. So if we're looking for huge, like meaningful year-long range breakdowns in ETH BTC, as absurd as it may seem now, if that breakdown sticks, I think .04 is your next level from a purely technical perspective,
Yeah.
which is pretty scary. But do you have anything before that, a sort of 057 overshoot, or maybe something closer to '05, or is it simply '57 range low? Don't think it's going to hold, and just kind of rug it to '04 if you have to.
So, like, I think in general, you can just try to trade the reclaim of that level. So I still have it on my chart. Like, I usually try to have levels of my chart that I would be willing to trade, right? And I still have 0.057 on my chart, even though I'm very much not going to buy it. And the reason for that is because if we break down and reclaim it, I might actually buy it. But if that breaks, I think if you want to like catch the knife, there is a trend line on the logarithmic chart that you can draw from the 26th of December in 2016, with a couple of touches to the wicks on September of 19, and then January of 20, and then you draw a trend line through that, and it kind of ends you up in the 0.05 area. Which I find decent enough. I don't know if you drew it on
Yeah,
that.
I've got something to that effect. Yeah.
Yes. So basically, like if you like somewhat get in that area, like 0.05, or like right now, that trend line for me is at 0.046, which yeah, would be quite low. But obviously, every week it gets a little bit better because that trend line is pretty steep still, all things considered.
You can also redraw it, which is a TA hack.
Oh yeah, it's the
Just
best.
draw it
That's the good
again.
thing. Best thing about trend lines is that if it breaks, you can just draw it differently. But no, like that's kind of where if it accelerates and gets into those kind of levels, and I'm like, oh, it's at this trend line, I think that's where it would bounce at least once. Now, like the notion that ETH has to outperform Bitcoin, I think is a little bit like I'm on board with that, but I think people are too certain of it. It could just be that ETH just starts behaving like the other altcoins do and starts bleeding out. Don't think that's necessarily impossible, but I'll still bet on ETH at that point. But I think people are just way too certain about ETH just kind of being like always outperforming Bitcoin. I think that doesn't necessarily have to be true. So
Well, it hasn't been
gotta.
true in the last year, right? Sort of, it
Oh
seems
yeah,
to be
it
market
hasn't.
conditions dependent, if anything.
Yeah, and I think in general, like even if people are like, oh yeah, last year's been bad, but once the cycle continues again, ETH has to kind of make new highs against Bitcoin. I don't necessarily think that's a given. Now, I think it's likely given price actions, like the price action we've had in the past, but doesn't have to. And as we've seen with all of these layer ones, it's pretty easy to replace stuff. So if we get a competitor that does something or that does what ETH does better, I think it will take a couple of years, but at some point, ETH is vulnerable as is everything else in crypto besides Bitcoin. So I think there's some inherent risk that people are kind of underappreciating, whatever you want to call it. So gotta know that, but otherwise I'll buy that breakdown. The moment it starts accelerating and starts looking like it wants to go to zero, I'll be buying ETH.
It's a pretty heretical view, right? Having such a distinct separation between BTC and ETH. It's very unpopular nowadays, where those are sort of taken together for granted to some extent as top two. Then everything else is variable. For you, it seems to be the case that BTC is the one from like a longevity point of view, and then ETH is closer to the altcoin category than the BTC category.
Oh, yes.
That's fair. I mean, it's controversial, but it's fair. My view is that sort of better market conditions would at the very least take pressure off ETH BTC downtrending for a year. Because I just think a lot of the speculation, Ponzi stuff that drives quote unquote value really makes an impact. But at the same time, I'm still of the camp that flippening signals are some of the best top signals ever. So I'd like to live in a world where both of those are true, where you can have like a modest expectation of ETH outperformance, sort of, you know, when market conditions are bullish or in the appropriate regime, but to still have the utility of ETH BTC flippening being a useful top signal. That'd be quite a good world to live in.
I think
see
in
what
general,
the market gives us.
Yeah, I think in general, ETH next cycle is going to be really interesting just because of the deflation meme. I think that could take price quite high, even on relative terms. But I would sell that high or try to like get as close to possible of that high and probably call it a day at that point. Like I think that's the last time where I would be like the last narrative for ETH that I would majorly play, and then I would concentrate on Bitcoin, because I think like when you get that deflation meme, and if it really kicks in, you would get ETH very close to the flippening. And I think at that point it's basically like XRP. I mean, XRP technically flipped Bitcoin for a very short amount of time with like obviously not like unreleased tokens and everything. But if you took the whole market cap of both, if I remember correctly, back in 2018, XRP flipped it, never really managed to do anything significant since. And I think ETH would probably do the same. If that whole deflation meme kicks in, gets very close, might even flip it on like some metrics, and then I think that's that, and that's done. And then you look for something that's going to replace ETH, because at that point it's too close to the ceiling. I think Bitcoin's always going to be the ceiling to really make sense to trade. I think at that point, if anything, you'd want to short ETH and look for competitors to long. But we're not there yet. We're not even close. Right now, ETH is just down only. And that needs to change first before we can even talk about all of this.
Yeah, that's fair. We're sort of 5 steps ahead, but at least it's exciting. Like the ETH BTC pair, you know, acceleration may seem sort of bad because it's red, but it is exciting because it happens closer to the end of a trend rather than the beginning. We've already had a bleed for a year, so we're in the more volatile portions, it feels like, which is cool. That's all I've got for ETH. I don't know if you have anything else to add. We can look at a couple of the altcoins that we mentioned on Technical Roundup, our free weekly newsletter, trletter.com. Sign up, read it. I try to make some jokes every week. They don't always work, but if you want the sort of neutral, objective levels and, you know, no useless questions, that's the place to go. So let's do Link first. That's at the range high. You were also tweeting about Link. I think that's where a lot of your 4th grade reading comprehension
I mean, that's
from.
where all it came from.
Linkies
are just a special breed. Like
they're built different.
Oh yeah, and they write like PhD papers on whatever, and then they get dumped on by Sergey for like years and years, and have Stockholm syndrome because of it. But I actually like the chart for once, so I don't like. I'm not
Both
actually.
can be true. Yeah.
Yeah, I think like the thing is with the Link people, like Link has something on the fundamental side that a lot of other projects don't have, like at least the promise of what it can become, and that has a lot of them excited. And I mean, I get it, right? But also like at the end of the day, if price doesn't go up, price doesn't go up. So like for me, like if you held Link from the top of like 21 all the way to now, you lost. Like that was a major misstep. But also like good on you if you have like the conviction to stick with your thesis and whatever. But I think like from my perspective, and my perspective is a trader perspective, if you were stuck in an underperforming asset for years and years, you're just being dumb. But then again, people from the traditional side of things, the investment side of things, like I've had the run in like in the last couple of days, they will obviously look at whatever the fuck I say about crypto, which I mean there is very limited knowledge about all of the underlying, for me at least, when I look at crypto. They will look at me and be like, hey, this guy is dumb, he only cares about the price. And his whatever, how much money he makes, and he doesn't care about like changing the world. Which fair enough. I think both arguments can be true.
We're changing the world by creating DeFi exploits to fund North Korean missile programs.
Yeah.
That seems to be the biggest change we're making on the geopolitical and global landscape. Also, I think knowledge for the sake of knowledge, it's very easy to criticize given we have like infinite access to all sorts of knowledge. So there's like an opportunity cost to becoming knowledgeable in something. So then the argument has to become, yeah, you have to attach some sort of utility measure to your knowledge or time spent acquiring knowledge. And it's like if you apply that in the blockchain crypto space, it's like knowledge about fundamentals. What's the expected value or payoff for that versus knowledge about futures, momentum, price action, trading stuff in crypto. And I'd be very willing to make the argument that the second one for most people on most timeframes is much more helpful than the first, you know? So I get where those people come from, but at a certain point, if your fundamentals mean fuck all, or if your fundamentals land you into bag holding something that underperforms on the way up and performs just like everything else on the way down, surely at some point you have to reassess your priors and think, okay, either this is like galactically, generationally mispriced, the market is wrong, which is always a dangerous position because you're still a speculator. You're just trying to act holier than thou about it because you do more reading. So yeah, I've just never found that to be fully convincing. Also, to be fair, if my altcoin if my biggest bag went sideways for like over a year, I would also get a PhD and know everything. So the circumstances are understandable. Also, no hate. Like obviously, I'm being pithy and facetious and stuff, but at the end of the day, do what works for you. I just think from time to time it's worth having like a very honest identity check. Like, what am I in crypto for? Or even if I'm like super ideological, do I have certain speculation benchmarks that I have to meet to make it practically viable to do what I do? And if so, which tools are more appropriate for sort of meeting those income or speculation thresholds? And I think you can make a very good argument in crypto that skewing towards technical momentum stuff has a larger payoff on shorter timeframes than becoming a FA genius. So, but you know, maybe I'm wrong and I'm an idiot.
No, I 100% agree. Like we've also had good projects just disappear, right? Like a lot of the stuff that people said was good fundamentally, and I mean, a bunch of very smart people said it was good fundamentally, just disappeared too, right? So you're not really safe in crypto ever. But yeah, the linkies got very upset at me, and I wasn't even trying to like throw shade because as
you were positive the last time we spoke about it because you were hey, if this range breaks, it's getting sent and it's been tested more times than Wuhan citizens. So you know.
Yeah, I mean, I've been like decently bullish, reasonably bullish, and I've been also at support. Even like when this was at the dollar support, I was like, this is one of the altcoins that is interesting as one of the only altcoins that I could see myself buy in those kind of circumstances. But that was kind of completely skipped over, and the only thing that the linkies focused on was that I mentioned them in a post where I was like, all the fanboys of coins go after me, and I mentioned Link specifically. And if you remember, like back in the day, back in 2021, I was shit talking Link like nonstop. and that's
Yeah,
where
that was your
kind of
AVAX equivalent.
yeah. I was like, and it basically went to nothing, right? Like I was shit talking it at like $30, it went to 50, and then I was the laughing stock of the entire Link community, and I maintained being like that. This is just stupid, and it's gonna go down, and then it went to $4, right, or like $5 or whatever. And I feel kind of vindicated on that one, but it doesn't really matter. Like it's not like I traded it a little bit. I shorted it a couple of times. But yeah, now I'm like back in team. This doesn't look that bad. It's just the community just hates my guts, which is fair enough.
A lot of
I should talk
communities
that
seem to
coin
hate
for
your
a long
guts.
time.
That's
Oh
because you
yeah.
mostly talk shit about altcoins. It's like they need to die for Bitcoin to go up, but when they finally go up, I'm going to see that as a top signal and sell anyway, so everything's going to die in the end. Like,
yeah, but that's how it works.
You can't really win with you. But also, like, it is very possible, and I think even cogent, to make the argument that even if you are correct about all of the fundamentals, that doesn't necessarily mean that value accrues meaningfully to the underlying token.
Oh yeah.
So, and there are plenty of examples of that in crypto with like fee switchers and useless governance tokens, which unsurprisingly you also had an opinion about with your fourth grade, self-professed fourth grade comprehension. But like you could be right that Link, as you know, is the backbone of DeFi, as the go-to oracle and all this institutional adoption. But that doesn't mean that the market is going to that's going to be reflected in the underlying token price, you know? So one doesn't necessarily follow the other. And that's like a very harsh lesson in crypto. A lot of good projects just die because there is no obvious way or clear way for the fundamentals to spill over, if you will, into token valuations. So,
yeah.
But on the technical side, I guess I sort of summarized what the bullish argument would be, that it's up against the range high. It's been tested a lot, so if it breaks, it'll go up a lot. That's the simplest version. My view is generally more conservative, that, you know, if this range has been intact for so long, I'm going to assume it's intact until proven otherwise. I'm sure the argument of, oh, it's been tested so many times, so this time is going to be different, has been used at the last 3 highs at least. I'm somewhat skeptical of the long list of bodies that have made bets on the breakout, given how sort of, you know, rangy, for lack of a better term, this thing has been. But I think if you're a decent breakout trader, this is a good one to have on your watch list. There's also some conference meme going on because I've been unwell. I haven't followed that particularly closely.
I think it's over already.
It's over. Okay, so I mean, if this stays decently, you know, if this kind of keeps hugging the range high and there's no obvious conference sell the news, I'd see that as a good sign. Because as we've covered with many altcoins over the last few months, the meta has been very cynical in terms of buy the rumors, sell the news, dump the conference, like very hit and run type of thing. So if this thing can sustain post-conference, that'd be a kind of welcome change to how most of these trades have gone. The only level that I have on the daily, aside from whatever macro version of the range high you want, either at $8, $9, or whatever, is the daily cluster at $7.40 to $7.50, sort of the last red candle before the final burst of the 4 green days that followed. I think that's a decent midterm pivot to have. Anything much below that just looks a bit unwindy and like a classic range high retest that starts spilling over. If you want to be short-term optimistic, I think that's okay. But the better trade is probably still some version of doing business at the range high, be it like a real breakout or a real sort of failed breakout rejection type of thing. But midterm range between 7.5 and 8.5 seems to make sense. And the post-conference window, as I mentioned, is probably worth watching. Do you have strong views on this thing? Is it wait for breakout city? Is this a DonAlt classic of buy some sort of support, so in case it breaks out, you don't feel terrible and you can sleep at night?
Oh, if I was not so like bearish on altcoins, right? As in like on the whole altcoin narrative, I think I would already be in Link. Like I've seen it, like I've seen it walk up. I like the chart for like a couple of weeks now. It's only like I don't want to kind of counter trade my whole, okay, it's a Bitcoin ETF, why the fuck would I be buying anything else kind of thing. But if I had to, or if I was more bullish altcoins, I'd be in Link already. So I kind of like it. I like it on the USD pair. If you look on the Bitcoin pair, that's already made kind of like a higher low also. Now, obviously not too convincing given the whole trend that it's gone through. Like it's been a massive, massive downtrend. pretty relentless, but I don't hate it too much, and I like it much more than a lot of other altcoins. But I'm not gonna be trading it most likely, just because I think the Bitcoin narrative is clear, everything else is not so clear, and I don't want to pick the one coin that outperforms. But if there's gonna be a coin from the traditional world, as in like the ones that I know, as in the boomer coins, I could see Link be one of them. But I'm not gonna take that bet.
Cool. Makes sense. Sort of contextually, if your overall idea is going to work out, it has to come off the back of altcoin weakness and Bitcoin strength. So you'd rather punt Bitcoin strength as the necessary condition. Fine, fair. The other one was Solana. I've just opened that up now. A bit of a shallow pullback over the last few days, pushing again now. This just has this really annoying area in the high 20s. It depends exactly where you want to draw that line. Not just metaphorically, but also in very literal terms. 25.5 is the sort of clear daily resistance. The monthly highest close is also at 26. The weekly. I quite like the monthly candle body, actually, at 24. That seems to be a decent kind of monthly close level, at least with the price action we've had so far. So, I mean, given the whole FTX estate bankruptcy thing, SBF coin narrative meme, this thing has held up sort of remarkably well, especially compared to a bunch of other alts that are just completely anemic and down at their yearly lows, especially for a high cap. So I think that's to be noted. But at the same time, this thing has just been in a range since like all year, basically. So that's something to counterbalance it with. I don't know, the BTC pair looks all right, actually. And that's in a period of BTC strength. Again, it's one of those that's on the cusp, because if you were to look at it completely objectively, it's just been range bound on BTC and USD, right? But if you look at a ton of other altcoins, certainly in similar market caps, they've just been down only and bleeding, or at least a big chunk of them, both in BTC and USD pairs. So on its own, it's ranging, but ranging in these conditions is quite an achievement. How do you have the range high, or what do you think if there's a big Solana trade, what does that look like and where does it happen?
I mean, when you look at Solana, right, on the weekly time frame, we had that massive FTX breakdown, where we lost the range low at $29/$30, basically. And I think above there, it starts looking really, really good. And like you said, it has like this very weird strength considering what's going on, and I like those kind of, like, that's what I'm looking for when I'm looking for altcoins or anything really. I want to see strength that doesn't really make much sense on the narrative side of things, right? Like the narrative is FTX, and that whole thing is going to dump a bunch of Solana on everyone. But the price action has been 10 times better than almost everything else. It's been better than ETH, and ETH is one of the more liked altcoins and has much better narratives going for it. And then you kind of questioning, why is this? So I like it on that front. It's been too strong for what it should be. So there's someone interested in buying it, and if it makes it way above 30, I like it. In general, Solana is actually something that if I didn't have the Bitcoin narrative, I would own, like, just flat out. I like the fact that it made it back above 21, $22. I would own it if I didn't have strong conviction about this.
So counterfactual DonAlt is long to the tits a bunch of altcoins. Like, oh, if my auntie had bollocks, she'd be my uncle,
Yes.
If the world were different, if you were 10 years younger, type of thing.
But it's very rare for me, really. Like,
True.
usually I look at these coins and I'm like, this is complete and utter garbage, and why the fuck does anyone own it? Now I have to actually look for reasons not to buy, which is quite rare. So I like Solana.
You're never short on finding those reasons when it comes to alts. So
usually it's quite painfully obvious when you look at the chart. Now I like Link and I like Solana, and I would own them both, if not for just like this market being just made for Bitcoin only strength. And what this also means is that if I get what I want, which is Bitcoin rallying and these coins doing poorly on a relative basis, And those are the coins that I'm going to buy once I start rotating, if that strength persists. Obviously, it could also be that those are the coins that break out with Bitcoin and I get completely hosed on a relative basis. Would be cool by me as well. Then I'm going to claim clout on having been right but not acted on it.
I mean, that's my entire shtick, so don't worry. I've got plenty of tips and tricks for that one. The final altcoin, since we're mentioning sort of narratives and outlier strength, the Litecoin halving is going to kick in any day now. So I'm wondering if
soon
above 70, the lights get turned back on, or how that one works. But yeah, old joke for those who've been following for a little bit. Final altcoin I want to talk about is the S&P 500.
Mm-hmm.
So one of the prevailing narratives now is that the correlation is basically dead. So, and there is some sort of quantitative argument that's been made that's fairly compelling, just sort of, just statistically makes sense that, compared to gold, compared to, the bond market, risk indices, that the whole macro SPX correlation meme just isn't as strong as it was before. I think that's generally fair for like those who are used to the tick-to-tick trading on low time frames, but I'm not sure whether I'm ready to dismiss macro correlation having an impact completely. I'm not ready to sort of throw it out fully because I think that if you were to zoom out and look at it bigger picture, when the S&P ripped and almost made new highs, crypto did not perform well. On the recent kind of lower highs bounces and stuff, crypto was also pretty anemic. We're generally more sensitive to downside stuff. It's just the fact that the S&P has been fairly strong up until recently, and crypto hasn't been. So that correlation, so the absence of that correlation based on decent evidence is the fact that we haven't followed to the upside. It doesn't necessarily mean that we won't follow to the downside if this thing gets hammered. I don't know if that makes any sense, but at least that's how I interpret that in my head. Certainly, if this thing really starts to roll over, I think it would affect us. I think the big intraday moves affect us as well, like we saw during the NFP non-farm payroll pump and dump today. There's clearly some sensitivity to that as well. But I'm wondering what you make of... I mean, we can talk about technicals in a second. I think it's a pretty straightforward look. But as far as the correlation is dead, the king is dead, logging of the king type of thing, where's your thinking on that?
It'd be so funny if those people are like, oh, the correlation is dead, so crypto can go up now, while the S&P goes down, get proven wrong, but like in the wrong way, as in like the S&P goes up and crypto stays down. It would just be too funny. Even though I'm long, I could actually see that play out too. It's not like the S&P's been particularly weak, considering the circumstances recently. But yeah, I think it's bullshit, basically. I think that is like dumb reasoning. Like we've had I mean, obviously it's true on the lower time frames and recently, but I think that's basically just, I mean, you're not going to trade tick for tick all the time. There's always going to be times and periods of where you decorrelate a little bit. And the large moves, we're going to kind of, the moment the S&P does a large move, we're going to fall in line again. At least if the S&P goes down. If the S&P goes up, it doesn't have to mean that we go up as well. So I'm not on board with that. I've seen a bunch of people justify their altcoin positions with it, which I find even funnier because that is just wild. But yeah, that's kind of where my head is at. Like if the S&P goes down significantly, there's a good chance that my setup will fail and I don't cope about it. It's just how it is. And if the S&P goes up, I'll probably have a little bit of a tailwind and that's going to go better, but it doesn't have to mean that everything goes to the moon either. So not on board.
Pretty balanced. I generally agree, as I started with. I think it's a bit too early to dismiss it completely. And I also think in general, the whole decoupling trade has been the worst trade for like 2 years running now. Yes. And it just hasn't been a good way of looking at markets because initially it was really bad because what people called decoupling was just lag, so you'd get hosed. And now it might be bad because your data set sucks based on just crypto being weak when the S&P was strong. And that doesn't mean it's going to be strong when the S&P is weak, So yeah, I think it's still worth paying some attention to. Obviously, it's not as strong as before, which is good. But the full decoupling and full apathy, both of those extremes, I'm not super comfortable with at the moment. it is more bearish ammo than bullish ammo, though, right? Because on the bullish ammo side, the S&P doing well just really hasn't helped all that much. So if you're going to be making correlation arguments, you're probably making them as a bear, that we've been more sensitive to downside stuff. So if the S&P looks weak, we'll feel it, essentially.
Yeah. I mean, I'm just also very much not in the camp of S&P is going to make new highs anytime soon. So like that's like the biggest damper on my, like if that wasn't the case, I'd be very happy to be very bullish. But we basically have to decorrelate quite a bit to make what I want, this like 36K, for example, you have to decorrelate quite a bit, because I don't think we would necessarily have the S&P strength to go all the way back to
it could chop, right? Like if I had to provide you with some copium, it would basically be that we've had windows where strong enough liquidation flows in crypto can override correlation weakness with risk indices. So if we get a big 28K breakout, just the breakout plus liquidation flows would be enough, as long as the S&P doesn't totally nuke. That's the best cope I can come up with. As far as S&P technical stuff goes, it's actually not great, in my opinion. Also, God, I sound so nasally given I'm sick, so forgive me for talking as much as I am. But the monthly close was bad, I think. It lost the conservative cluster at 43.70. It lost the COPE cluster at 43.10. And so this month, until proven otherwise, is kind of just a retest, right? And ideally, it sort of reclaims that and whatever else. But I think it would be a bit of a weird reclaim. It might happen, but it would just structurally look a bit off. I don't know if that makes any sense, but it'd just be a strange one to just erase. And as far as the supports go, I don't think we've hit anything that's too significant yet. I know there's some market commentators who had the highest weekly close at 42.77-ish, that highest week. To me, that's not really a good level. That's more the sort of deviation outlier portion of that move. And the better support, I think, if even conservatively, to be honest, is at 41.70-ish on the weekly. That big shelf before the breakout that took us to the high. We haven't really tapped that yet. So, and if you want to be Don monthly range bear thesis, the earliest monthly you're getting is 41.30, if not down to the cluster that we turbo shilled at 37.60 to 37.05. So it just looks like if the monthly is in the driving seat, that monthly close is crap. And then even if you're relying on other timeframes to nullify the crappy monthly close, I think the earliest level where it makes sense to make the overriding argument is at 41.70-ish, and we just haven't quite reached that yet. Do you have any technical source you want to add to this?
No, pretty much. I have the exact same view. I think in general, like if you look on the monthly, we closed below the level of like 4.310. What could happen this month is we get upside during the month. We still have quite a long way to go, like 25 days till the close, into the cluster. And that acts as resistance and then smacks us back down. That'd be the most bearish thing I could imagine on this thing to happen. That could even override, I think, my view on crypto as a whole. As in, like if that happens and we close back below 4.310, I would be selling stuff, because that would look horrendous.
I really love when, from a trade management point of view, you bring in like esoteric dark arts to justify your like Bitcoin long and short. So when I do my cringy TA risk management videos, I'm like, oh, your invalidation should always be at least somewhat linked to your original trade idea. Whereas in your case, it's like, yeah, I'm really bullish BTC, but the Japanese yen against the Swedish krona had this like overbought deviation. So I sold all my BCH. It's like, oh, fuck, man. How am I supposed to keep track of this?
I mean, that's just how it goes. I mean, the whole TA is a horoscope for men.
Real.
I'm down. Like I'm down. That's how it is.
Fair enough. But that's the S&P, basically monthly cluster watch. Yep. And but the monthly close wasn't good. Let's hope it has enough of a green body to bail out Don, basically, and then it can do whatever it wants. Should we do some news? I think that's
Let's hit it.
That was enough. So, Casual Friday, right? First article.
Tell me you opened them all one by one.
No, I actually did it as a sophisticated market actor this time around. You can blame the illness trying to be more efficient.
Fair enough.
we kind of touched on this indirectly. JP Morgan says Ethereum has become more centralized with staking surge. So this specifically also pointed out that Lido has a controlling majority of Ethereum staking activity. There are some people who don't find that particularly palatable from a decentralization point of view. I think honestly it's kind of expected, especially in bearish market conditions, where people would prefer just sort of safety and whatever, like they'll happily sacrifice decentralization for safety plus yield. And also, you don't have the capital or risk appetite to really sort of try to find different sources or experiment in terms of how you're staking your ETH or where you're staking it or who all of that kind of stuff. That was really poorly explained, but it's basically like on a centralized exchange, are there really good reasons to try out 10 other small centralized exchanges as opposed to, say, Binance or something like that? I mean, yes, especially if it's using our ref link, wink, wink, nudge, nudge. But like really, when the bear market is here and you're worried about counterparty risk and business risk, cycle risk, all that type of stuff, it kind of makes sense that users will converge around fewer solutions and are less experimental with this type of stuff. And also part of me wants to be really cynical and say, well, build something better than Lido then and take that market share and decentralize them. But I've also got 4th grade technical knowledge, comprehension, understanding. So there's probably a bunch of stuff that I'm missing on that front. Do you care about Ethereum staking decentralization? And also this total staking yield has declined from, according to this article, from 7.3% to around 5.5 currently. That's roughly what T-bills are at. So I can also understand why just, there isn't a lot of incentive to innovate on the staking front, or just in general for people to move away from the incumbents, because it's just not worth the risk premium.
Yeah, it fits my narrative, so I'll allow it. But usually I wouldn't care. For me, just like all of this stuff is more centralized than most people think. I think like if Vitalik died tomorrow, ETH would go down 20%. We all know it. Like, and then you tell me like it's decentralized. Like,
is that a threat?
No, but like people are worried about the wrong things, I think. Because this stuff is so centralized, and then they're like, oh yeah, but this and that node and whatever, blah blah blah. I don't think that's necessarily the main problem that we have in this space. Now it's obviously a problem, I think. Like if everything runs through Lido, that seems like not great. But then again, it's not like the space is like ETH itself is super decentralized.
I don't know, Don. AWS is pretty decentralized. That's the kind of cynical asshole comment, right? Yeah. As a trader, I don't care too much unless people who are really smart about this type of stuff start getting concerned. Yeah, like if Eric Wall or something got super bearish this thing because of Lido, I'd be like, oh, okay, I should probably think about this. But at the moment, it seems more like,
works for me too.
Right? Yeah, exactly. So I think it's more ideological skew and preference than actual risk. But I value people who think about the long-term implications because we need them. And God knows that's not us, right? Like Bitcoin's security model, for example. That is in the future, but it's nice to start thinking about these things now. I think there's a similar thing with Lido and staking centralization. I just don't know enough about the topic or how decentralized Lido is and so on and so forth to have strong views. But yeah, there we go.
At the end of the day, like how I feel like whenever I think about this is basically like all these fundamental people, right, that do all this fundamental work, they do the work for me, which is quite great. As in like I make the money by trading and they do the research. And then if someone out of that community that I respect enough has a strong view, I'm like, okay, I'll take this and into consideration, see if it makes sense. Most of the time it does, and then move from there. So it's quite nice because I don't have to do the boring shitty work of actually understanding any of this. I can just do the fun work of making money with it, and then once someone that I respect comes to me and is like, hey, this is actually quite dangerous, I'm like, okay, well, I should probably just move on to something else. It's been going quite well, but I really appreciate the work that's done by actors like this, because at the end of the day, like otherwise it's just all speculation, which, I mean, it is 99%, but that 1% is very important, and it needs to grow, I think. It's just, I definitely don't want to be the guy that makes it grow, because I couldn't care less. Like, it seems so fucking boring to me.
It also doesn't really change much, right? It's like, oh, ETH is into a really good level and a bunch of people just got liquidated, so I think it'll mean revert. But Lido is really centralized, so I'm not going along. It's like those two don't really go well together.
Nope,
but
not at all.
Still, here we are. Thor swap Dex enters maintenance mode amid illicit activity. So this is the party known as the FTX hacker, transferred 22,500 ETH over the past week, and they're swapping ETH for BTC through Thor chain. So it was funny to see a lot of Thor accounts tweet about their massive volumes, TVLs, etc., when the primary use case was just to wash and launder hacked and stolen funds. So after that, they, as it says here, the move follows consultation with legal experts, advisors, and law enforcement agencies. The platform will remain in maintenance mode until a more permanent and robust solution can be implemented to ensure the platform's continued security integrity. My understanding is they can still just use it. If by sort of engaging or interacting directly with the smart contract itself, as opposed to the front end. It's like the whole Uniswap meme, right? Where you can sort of KYC and regulate the front end, but you can also just directly engage the smart contract. Again, I could be completely wrong on this, but that's my understanding. I'm sure we'll be corrected on Twitter or on the comments, so apologies there. I didn't say that with any confidence. But yeah, this is just more of the North Korean meme as well, right? I mean, this is the FTX hacker or whatever, but it seems like DeFi is literally only useful for security researchers getting white hat bonuses and exploiters either just making a lot of money or funding North Korea's missile programs. That really seems to be it. Even the speculation stuff, like, oh, it's useful for speculation. Well, not really anymore, because the prices of these things and volumes and even the risk, not risk-free rates, but just like the returns you're getting from staking stablecoins compared to TradFi don't even compare, especially on a risk-adjusted basis, considering the counterparty risk, exploit risk, etc. So speculation down. The appeal of the interest rates that are offered down as well, and sort of narratively, it's it's North Korea hackers and bad people, and this is a crypto native who loves to defend this stuff, having to say it because I think it's just overwhelmingly true, which isn't great.
Yeah, I mean, it's quite funny that we went from being afraid of North Korea throwing nukes at us to being afraid that North Korea is gonna come after our DeFi protocols.
Yeah,
it's horrendous, and it's not really in the media yet, but I think it will be eventually if this continues, and then we're gonna have bigger problems again, because that is something, if you don't like crypto, it's very easy to twist. You don't even have to twist that much. It's literally just a bunch of crypto protocols basically funding North Korea, which is like very charitable from them, but is obviously not the best look, considering
it's such easy political ammo, isn't it? Like, just there. And the thing is, the sad part is we don't have that much to show for it to offset how bad the optics look. Like, yes, there are exploits, but look at this. It's like there is no this. It's just exploits. And also, even if there were a this, just the amount of value or utility or TVL, whatever volume-based metric, or just in dollar terms, like, very simply, good stuff versus bad stuff. I think if you added up the cumulative amount of money lost to DeFi exploits, it's like orders of magnitude higher than whatever fucking so-called useful stuff that's happened with this tech. Especially if you take the view that the kind of speculation token swap stuff isn't generally useful economic activity, at the cost of obviously negative stuff like funding missile programs. Dude, it's just really hard to come off looking good. And we're trying our best now with the whole real world assets meme, but I personally don't find that narrative to be super compelling. Certainly not in a high interest rates. Well, the thing is, the high interest rates environment is tricky because at the same time, it makes it appealing to try to get RWA stuff going. But if you have a view that rates aren't going to stay high forever, then it's just a fad, right? Like, why would you build out all this real-world asset, liquid, treasury, staking, infrastructure, whatever, if you think rates are going to go down eventually back down to 3-2% for your Ponzi's to go up? It seems like the equivalent of all these large Web 2 projects getting into metaverse DeFi stuff at the Pico top. So I don't know. I've mixed views on this, obviously, and my head is jumbled because I don't spend a lot of time thinking about this. But real world assets I don't find terribly compelling. And DeFi, the real good produced by DeFi versus the real bad produced by giving North Koreans money. I think even at your most charitable, that's a really hard case to make, especially in its current form, when even the speculations and rates are so shitty compared to TradFi.
I mean, I agree, but then again, you can go even one step further, and this is something that I think barely anyone talks about. What if you do the same with crypto as a whole? Like, you could make the same argument, like
at least we have stable coins for crypto, right?
And that's actually something I very much agree with.
Yes,
like stable coins are fucking great. I think those are the ones that have done and have had the biggest real world impact, and actually really, really good real world impact. But beyond that, it's pretty hard to make the argument for crypto. But I'm glad that all the crypto opponents are just kind of too stupid to take the low-hanging fruit. They just take whatever, like they make dumb arguments about like mining being bad for the planet, whatever, instead of going for the real ones. I think they just don't understand it enough. And that's coming from someone that understands crypto from a 4th grade level. So take that with a grain of salt. But there is low-hanging fruit, and there's a lot of stuff that politicians and the media could go after if they truly actually looked into it, besides just being like crypto bad. I hope they never learn it, because this is our market and it's great to play these Ponzi's. I don't think there's a better market to trade out there anywhere. So I hope that continues to be the case, but gotta be realistic from time to time, I think, even though I think we are too realistic. It's just because we're Europeans, and Europeans always have to be down on everything.
And beartards as well.
Yes.
Yeah. Also, I just, on the whole political whatever front, we obviously make it too easy. But it also, like, the overall picture of crypto after 2021 is just so rough, right? And you'd think with the amount of inflows and all the good stuff we have, we'd have a lot to show for it. Like, yeah, okay, 98% was useless speculation, but after 2021, it was so phenomenal, we actually managed to build out XYZ. We just haven't yet. It's really stablecoins the main thing. And the point I was getting to was the most depressing part about the stablecoin narrative is how the US is so, against it and ideologically opposed. If I were the US, I'd be super pro stablecoins, right? It's sort of strengthening the dollar hegemony and exporting it to the world using the quote unquote most cutting edge tech, etc., etc. You just generally want more people to be using dollars and for that to become even more dominant as a currency for transfer. So I think just geopolitically, having an anti-USD stablecoin view in the US is pretty self-defeating. So I hope that's one thing that changes. Although it'd be nice if we stopped counterfeiting our stablecoins. That would probably help.
Yes, that'd be quite nice. I mean, even if they made their own, right? Like, if they made their own but didn't like regulate it too much, just ran it like the crypto people run theirs, but guarantee that it actually is one-to-one backed. And I mean, if a government does this, it would obviously be, right? I mean, it's the same. Like, $1 is backed by what? I mean, like, you couldn't even make that argument anymore. You couldn't be like, hey, the US says that one digital dollar is the same as one actual dollar, but I mean, can they prove it? I mean, it's the fucking US government, right? This is how money works.
Here we go. Vaxxed Matrix agent makes argument for centralized digital, central bank digital currency. Or whatever.
I mean, obviously, like, I'm not big. Like, I don't think this would be like the best for the world itself, but I find it so stupid that they don't. Like, I'm so surprised on like a strategic point that they don't, because I mean, you just basically enable a bunch of people to use the dollar. You make people hold dollars all over the world. People can start kind of like saving their money in dollar, and then you can just inflate their ass and have fun with it, right? I mean, that's literally how it works.
Airdrop it and stuff, do all these verifiable PR campaigns. Maybe the Pentagon can stop losing like billions out of nowhere. That would be really nice.
But for some reason they don't take it. I
Yeah, it's
don't know
bad.
why.
It's bad.
I'm shocked.
There must be something else that we're missing.
Yeah.
If it's obvious, let us know in the comments. But also, it doesn't help that they crack down on like the more compliant US-based issuers like Circle, and all it does is just send people to offshore, less regulated blockchain dollar producing entities. So, yeah, just the policy there is all kinds of wonky. Speaking of all kinds of wonky, SEC likely to approve all spot Bitcoin ETFs at once, says former BlackRock executive. So he said the US will likely approve all spot-coin BTF applications at the same time. Stephen Schoenfeld, CEO at VanEck-owned Market Vector Indices, echoed and said the approval could come in the next 3 to 6 months. So presumably this is just music to your ears if they're right, Don. And
Yeah.
the underlying argument makes sense though. Like I don't, and this is from Bednall, who spent over 13 years at BlackRock. His argument is, I don't think they're going to want to give anybody the first mover advantage, so approving them all at once makes sense. And that's something I agree with as well. I also think that's why the Grayscale litigation is being handled how it is, which is that if you roll over on that point and let them convert without approving the other spot ETFs, then you end up giving them an advantage, even though arguably Grayscale should be the last company to be given any advantages, right? So I think, the permeable narrative would be some version of, they're going to approve it all, but they're delaying because they can't afford to give one an unfair start over the other. So once they roll over across the board, they'll just let them all go at once. That's probably how you'd want to phrase that. The alternative is obviously basically that argument just 180 on its head, which is it's going to be delay, and then delay indefinitely because they got their ass handed on the Grayscale case. So they need to come up with good reasons that aren't capricious and arbitrary to sort of reject a conversion. And when they do, they'll reject the conversion plus deny the ETF. The good part is, even if they do that, you probably buy that because that would nuke the entire market enormously. I think that'd be one of the worst candles in probably this year of trading, or one of. And then the subsequent days and weeks and whatever discount that creates, there's probably a good trade there. So decision tree wise, ETF approved, buy. ETF denied, wait for the bodies, then buy. So I guess there's some simplicity in that at least. What do you think about the whole ETF lineup, Grayscale litigation, end of year, 3-6 months, all these spot ETF memes?
Yeah, I think it's pretty. Like I'm very, very certain, like not 100%, but very, very certain that we're gonna get a Bitcoin ETF, and I think it makes sense to, like you said, kind of get them all at once. And I kind of how I see it playing out, right? And this is just me saying it way before any of this actually happens, and maybe we don't get the ETFs, right? But I think we're gonna get the ETFs. It's gonna lead to a massive candle to the upside, right? To the tune of like $5,000 to $10,000 in like a daily or 2 days or 3 days candle to the upside. And then I think people are going to realize that the volumes on these ETFs are actually much, much lower than they anticipated, which will lead to a sell-off that smart people are going to buy because they realize that like this stuff just kind of like is slow going, like it starts slow and then accelerates and accelerates. And then I think we're going to get a continuous kind of upwards movement, upwards trend as this kind of like ETF thing actually kicks in. So I think there's going to be like quite a bit of things to trade there. And this is why like on the bear in me, like I'm kind of like slowing down the bear in me because I think there is like this catalyst that is just going to catapult us up like 5 to 10K. And then the question is, how much do people actually want to price this in before it happens? Because I mean, I think I'm not the only one that is thinking this way, which I think should lead to kind of like people trying to price it in should lead to upwards movement before it. But I still think like unless we rally now towards 50K, I think we're still going to get that massive upwards candle that might even get fully retraced based on the volume of the ETFs afterwards. But I think, I mean, ETFs going to be bullish regardless. Doesn't have to mean that prices go up forever, but it does mean that we're going to have better flows. I think that is pretty much for certain in my eyes. Like we're going to get a bunch of people involved that haven't been able to. So even if the S&P keeps going down, whatever, we're gonna at least have a bunch of new people come in, and then the moment the global situation is kind of looking better, you're gonna get some strength. So that's kind of my ETF plan slash like idea,
Yeah.
how I'm gonna trade it.
Yeah, I think I mean, that makes sense. I keep going back and forth on my expectations for the spot ETF. I don't think it's entirely fair, and I've seen this comparison made that, and this sort of leads into the next article, so we might as well compare them. Ether futures ETFs see low volumes of trading in first few hours, and the VanEck thing had pretty shitty volume. And so that has led some people to infer that if Bitcoin spot ETF gets approved, that will also have lackluster volume, and that won't be great. I'm not sure that comparison can be reasonably made one to one, because I just think a Bitcoin spot ETF is just a materially better product than a futures ETF, and also it's Bitcoin, not ETH, which is a marginal point, but probably still somewhat important.
I would say it's a significant point, but
yeah, I mean, you would, of course. Yeah. So I think there's something to that, and I also think, like, if you consider the whole perception of counterparty risk in crypto, that crypto exchanges are basically all scams and can't be trusted, except obviously the one that sponsors the show with no conflict of interest. That's a joke, to be clear. Nonetheless, like, if you're someone who's sort of on the fence about buying some crypto or buying some Bitcoin or whatever, maybe you're a boomer investor, or you're someone more passive, or you're in TradFi and you only heard about it in 2022 when everything blew up, you think it's interesting, but you don't trust any of the exchanges. I think a spot, like a properly regulated BlackRock style spot ETF, if you're on the fence, that surely is enough to nudge you over. And also the Bloomberg guys posted some analysis of just how much volume and inflows these kind of new spot ETFs do, certainly compared to the future ones. And they're just better. The product is better. I think there's a demand for the product. I think there's also a contextual demand for the product, because futures ETFs suck, GBTC sucks, and crypto exchanges can't be trusted. So I'm hoping that if we get one, just based off the news alone, and also we have to consider the news impact, right? Like, news of the spot ETF gets approved, now you have a regulated, boomer safe way of getting into it, and then price is up 10, 15, 20%. Like, hey, that's not a terrible combo for volumes and inflows, at least in the short term. So
I do agree with that, actually. I just think in general, like, what's going to happen is a bunch of people are going to buy, and then it's going to take a while for people to accept it on the like, for example, like, if I think about like my grandparents, or like in general, like that older generation, because I've been asked about crypto and where to buy it a couple times from like the older generation, right? Like in their 70s.
You don't show them our Woo Ref link? Are you kidding?
No, I haven't, actually. And what I've been telling them, right, and everyone that's been asking me, is like, that I cannot really recommend them doing anything, because I know that they're not technically capable enough to do it, right? Like, I always told them, like, if you want to have exposure, there's no real good way to do it. So like, either just go and research it properly, or just leave it. And more like, the end result has been just them leaving it. And if there's an ETF, I think, like, I'd be more than happy to be like, hey, if you want exposure, you can buy this, because that makes sense. I mean, there is somewhat, but yeah, I don't know. Like, there's actually a European ETF already, I think.
Yeah, there's the Canadian one as well, I think.
Yeah, but I mean, those are like,
lol, who cares? Not real countries or continents.
But it's easier to show like people from outside of the ecosystem basically into it. And this is gonna be much more liquid than any of the other ones that we have anyway. So yeah, I think it's gonna be significant. Doesn't have to, like, some people are like, okay, the golden bull run is gonna be once we get the ETF. I'm not necessarily on that front. Like, I don't think we're gonna go to 200K because we have Bitcoin ETF. But I think it's gonna lead to good flows. So we'll see.
Yeah, that's the thing, right? It also facilitates a lot of boomer passive strategy flows, allocation type of stuff. And that takes a while to trickle through. I think almost, the vast majority of the immediate flows are going to be like just momentum traders punting the thing. And then it'll take a while for the more systematic stuff to sign up and get going. So that dynamic is probably worth bearing in mind. Or it just all gets rejected and we're fucked, and it's Gensler's final middle finger before he goes off. So we'll find out, I guess.
That'd also be funny in a money-losing kind of way.
Yeah, funny in a money-losing kind of way. Excellent. Well, I think that's the show, Don, unless you've got any special sauce to share with us. Might as well end it on a good note while BTC is up 2% for the day.
Let's go.
That's all from us. Leave a like on this video if you made it this far, or just in general. We appreciate your support. Thank you for the subscriptions. If you tune in to watch every week but you're not subscribed, you should feel bad. You can remedy that by clicking the subscribe button. The show, as always, is brought to you by Woo. Check them out via the links in the description. As with any exchange, especially given we've fudded them for the last 30 minutes, they don't keep any more funds that you absolutely need for trading. And yeah, that's it. That's the show. Have a wonderful weekend, and we'll see you all next week.
Bye-bye.